is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
Yeah.
holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. In every kiss, in every touch, you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We have the Dow Industrials up 246. NASDAQ is up 77. S&P's up 19.5. That's a gain of 0.8% in the Dow Industrials. 0.8% in the NASDAQ, and 0.6% in the S&P, all at all-time highs. Gold contract down at $1.60, trading $15.68. What do you have with the gold market, folks? We've been going sideways. Pulled back last couple days, tremendously lighter volume. Bottom line, gold wants higher price. Silver down 15 cents, trading at $17.44. Let's go take a look at that silver market. So I haven't looked at silver. Silver right now, right there, okay, SIH. So silver market out here, we hit a low out here today of 1744. We're at that low right now. You've done 66,000 contracts. Okay, so let's see what we're going into here. You're coming into, you get a swing low out here that wants to be tested. That's 1728. You're coming into 111,000. Well, you get 66,000 coming into 111. Bottom line, looks like it wants to go hit it though. That'd be 1740. Oh, that's 1742. Interesting. Oh, that's 1728. 1728 looks like it's going to be gained inside of that silver market. Oil. Let's go take a look at the oil market. Oil finally caught a bid out here. Now, it caught a bid just in time. And what I specifically mean is that this was going after the bottom of the consolidation that it's been in, and it saved itself. So the last swing low in oil was October of 2019. That was $50.18 in this particular contract, which is the March contract. Well, we got down first time to 49.31, goes higher. Then 49.47, goes higher. We come back down on Monday to 49.42, and you have some juice behind that move, by the way. And now what you finally had is that you really caught a bid. I mean, this is a decent bid, meaning that you're up with $1.41. Not that the $1.41 is a lot. It certainly isn't from where we just came from, because we just came from $65.40. You got a little juice behind it. So that is saying that you can get a dead cat bounce inside the oil market. Now, when you take a look at the Fibonacci expansion contraction, a dead cat bounce actually could get you up to the 55 level. And right now, that's a 0.38 retracement of the way down. We'll see if that's what oil wants to do. But that's how that's set up right now. If we go take a look at ExxonMobil, this thing has been a mess in a huge way. We put this on a weekly. And what you're going to see with Exxon, bottom line is that, actually, I'm going to put this on a monthly. This is pretty intense. Okay, so Exxon had broken the consolidation it's in at 66.55. So you're at 61.06. You got the 60.56. That can try to make it up into that area. Exxon's still in trouble. That's the real bottom line. This is This is kind of intriguing looking at Exxon. Yeah, you're up 50 cents, but that doesn't do anything for you right now, meaning the oil contract itself is set up a lot better than Exxon is. Notes and bonds, you get the 10-year down 10 ticks, 130.21, the 30-year off 26 at 161.21. If we get over and we take a look at that 30-year, what you're going to see, folks, once again, the bottom line, you're rejecting lower price, you have tremendously lighter volume, there's just no sellers inside of this market. What you have here, we're back at 1.4 million contracts today. I believe when I was doing that update, it was 2.3 that you're going into. Yeah, 2.32. You know, these still want tremendously higher price, lower yield. And if we get over and we take a look at this yield, what you're going to see right now, we are yielding 1.62 in the 10-year. 1.31 is the all-time low. And my take number one is that we know we're not only going after it, but it looks to me like you're going to bust that, and somehow we are going to get into flat rates on the 10-year. You know, right now, before we back down again, yeah, I think you can get to 1.68. 1.68 is where we were last week. That's where it failed. But when you look at this chart's on a one-way route on the way down, meaning the yield's on the way down. When you go after the 1.31, there's nothing else there underneath it. King dollar. What do we have at King dollar? King dollar is making this run once again, trying to get back inside its higher range. Right now, you're at 99.037, and I believe it's about 99,500. But it looks to me like good old King dollar is going to try to basically get inside that range. Let's take this up and see what it's looking like today. So right. I got to do it again. Okay, let me do this again. Okay, so what we're doing here, folks, is that we're taking a trend line from the beginning of when the dollar started running higher. That was in February of 2018. It ran higher and stayed in a big uptrend until the first week of October. That's the first time we broke the uptrend, which that's almost 2 years, by the way. We got back, it ran right back inside the uptrend, broke again the first week in December. Now what it's doing is trying to get back inside it. This is going to be a big number as we approach it. And we are almost right there. 99,359 today. If it had jumped on top of that, it could have got in it. So we'll see. You get 2 more days in this week in trading. More than likely, what I expect is that I would say that it looks like it is actually going to go after this for sure, meaning we're going to get the test. We haven't got the test yet. Each and every day that we bring this up, what happens with these trend lines is, of course, you have to get to a higher price the longer that it takes, because the trend line is the trend line. You know, so a time aspect of it gets pretty wild if you're not used to how trend lines work. You know, yeah, a couple days ago, well, bottom line is that, you know, it could have been, well, it was still 99,400 or something. Right now, today, it's 99,359. I don't see us making it out here today because we're at 99,036. What I do expect you're going to see, though, Thursday, Friday, it's going to try to make the run for that number. Dow up 225, NASDAQ up 67, S&P's up 17. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up 228, Nasdaq up 68, S&P's up 17.5. Let's go inside the NDX 100. We'll look at the strength versus the weakness. Strength out here today, CoStar Group. CoStar Group is up almost 10%, $66. This CoStar Group, folks, has everything to do with real estate and data. They're one of the biggest data providers inside the real estate market. So that is the biggest mover inside of the NDX 100. Mercado Libre second with 6% up. Micron Tech's up 4%. Align Technologies up 3.9. Taken away from it, Cernan Corporation is down 4.5. Vertex Pharmaceuticals up 2.9. Pfizer is down 1.3, and Gilead is down 1.2. No big numbers on the way down versus the way up. Inside the Dow Industrials, strength versus the weakness inside the Dow Industrials. You get United Health monster number. Maybe I'm not sure whether they come out with numbers also. They're trading off of CVS's numbers. CVS came out with some big numbers. That's putting 80 positive points into the Dow Industrials. Apple's putting 36. Apple is up $5.50. Apple's going after its high out here. You got Boeing up 20, putting 23 positive points. Caterpillar 22. Taken away from it. On the downside, there's small numbers out here. You have Merck minus 14. Travelers minus 10. So no big numbers there. Pretty interesting. You got. Let me see if I can find this thing again. This is a great little story. It's a sad story, but it's a great story. Let me bring up Berkshire Hathaway. Okay, BRK. So you had Warren Buffett, buying a huge amount of newspapers. This is that's about 7 or 8 years ago now. Here it is right here. And bottom line, for a certain point, he saved quite a few newspapers. Bottom line is that they have their annual meeting right now, and Charlie Munger, stood in front of them and told them that the bottom line is that the newspaper business in general is done, kaput. This is a pretty intense quote, so listen to this. Charlie Munger, whose newspaper company's executive, as well as the Berkshire Hathaway vice president, said newspapers have no future. Technological change is destroying the daily newspapers in America, Munger, 96, said Wednesday in Los Angeles at the annual meeting of the Daily Journal Corporation, the publishing company where he is the chairman. The revenue goes away and the expenses remain, and they're all done. Bottom line, Berkshire, what they're talking about here is a fan of newspapers since he was a boy. Bottom line, I love newspapers, folks. I read 3 every day before I even start my day. I just love them. So bottom line, it is sad, and it's an expense ratio. There's no two ways about this. It's pretty intense, though, when you have someone that owns such a large company, saying that the bottom line is that newspapers are done. He goes on to say it's a sad thing. He does bring two exceptions into it: New York Times and the Wall Street Journal are likely to survive. They'll definitely survive. Washington Post's going to survive. We'll see, about the rest of these newspapers because of digital. I mean, it's a monster number. The thing that's intriguing, when they announced that they were selling these newspapers, if you actually read the deal, the way it worked, folks, is that they did get someone to buy them, but they gave them all the money to buy them also. So the bottom line, it's one of those deals that they basically got rid of the operations. They hope at some point that they can get the money back. That's how that works when you basically sell something, but in fact you're financing it at the same place. You're crossing your fingers. It's just like selling a house and you give the people all the money for the house. Well, you're not in the finance business. I mean, if you want to sell a house, you're selling a house, right? And banks are in the finance business. You don't want to be basically taking second mortgages back on a house, if you're not in that business. And most of the time when you have to do that, that means that a bank won't finance the house, okay, which is pretty wild in general. 877-927-6648. We go take a look at the, let's go take a look at a few of the king dogs out here. If we look at Amazon first, all-time highs, up 12.20 today. We take a look at Google. Google right now, that's up 10.50. If we close here, this is going to be a closing all-time high. Microsoft, it was interesting. Microsoft had some selling out here this morning as soon as we opened up, and it's rejected lower price. Microsoft was down to 181.85, and it's up $2 from that particular point. That's how the market in general, folks, has been working also. What has happened is that it seems that, last couple of weeks, what you have is that you have an overnight market that basically has been crawling up. You have an opening that opens at highs, sells off a bit, like, we're talking about a half hour, 40 minutes, right? And then all of a sudden just goes topside once again. Netflix, let's go take a look at Netflix out here. Netflix right now, I think this is going to be an all-time, I don't think it's an all-time high, but no. This is going to be cool. So check this out, folks. I was talking about this yesterday. What Netflix has just done is this. This is a classic. Netflix is going for a tie. The high in Netflix is $423. Right now, we are at $378. And what Netflix has done, if you happen to be watching Tiger TV, you're going to see how you broke the trend line with conviction. What does that mean with conviction? Wide price spread, and you get volume behind the move. And we have both here. So Netflix, guess what? 423 coming at you. Now, let's go to the Russell 2000. Because the more that I keep looking at this, I'm saying to myself, you know what? The way this market's moving, folks, the Russell has been the biggest dog out here. But I have a feeling that before we see any major pullback, this Russell 2000 has to get to a tie. The high in the Russell is 1742. 5 weeks ago, we got up to 1715. We've been going sideways since then. You had a good week last week. Looks like we're going to have a decent week this week. The Russell last week, you had an expansion of volume. We went from 1618 to 1689. And it just looks like, hey, that thing wants to get up there. And what's going to be so intriguing, of course, is that if it does get up there, where are the other indices going to be? What we certainly have is that the NDX 100 has been running this market for a long period of time. The chips are basically the drivers. If we go over to the SMHs, what you're going to see, the SMHs right now just tested the high. It looks like they're going to close over the high. 150.74 is the last high that was established on January 24th. We are at 150.86. Now, the volume is less than half. That being said, we're at a Wednesday. This market doesn't want to back off. You're gonna get higher prices. It doesn't look to me like you're gonna get a rejection of higher price rather. If we did, then we'd be saying, okay, man, you got to the high, you retested the high, you couldn't handle price, and you're backing off. The way this is trading right out here, I suspect once again what we're going to see out here is that you're going to Basically, they're going to run the markets right into the close. That's the way that this is looking at this particular point. We go take a look at the XAU, the HUI, XAU out here. Right now, trading at a price point, XAU trading at a price point of 102.33. That's a sideways move. This has been building cause to get to higher price. Each and every time that we get to the higher end of this little range, you get volume in it, you start backing off, you get light volume. 877-927-6648. Dow Industrials right now trading up 249. Nasdaq's up 75. S&P's up 19. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 242, Nasdaq's up 74, S&Ps are up 18.5, and so the wireless industry, folks, they just scrapped their World Congress. So let's see where this is. They're saying it's canceled due to the corona concern, but it doesn't even look to me like this is in China. Okay, so the wireless industry scrapped its biggest annual showcase after the coronavirus outbreak sparked excess of participants. Yeah, this is in Barcelona. Look at this. So this is they have a 33-year history. The organizers called off the event, which draws 100,000 participants across the world with their latest innovations to pitch investors and to do deals. The global concern regarding the coronavirus outbreak, travel concern, and other circumstances make it impossible to hold that event. And that's pretty intense. Now we're talking an event held in Europe versus the epicenter of this, which would be in China. So that is a heads up. There's no doubt about that. What's going to get interesting is that how the Canton Fair is going to shake out, folks, because the Canton Fair is the largest fair in the world, meaning bottom line, it's the import-export. Everyone in the world that has anything and everything to do with importing and or exporting to China, there's buyers there from every place in the world. Now that is, that's still, it looks like to me like it's still on. I got this up right now. It looks like April, and that's what it was. I was at this actually last year, April 15th to 19th. And then 20. So yeah, they just keep going. It's phase 1, phase 2. So check this out. This is how intense this actually is. You have phase 1 that's the 15th to the 19th. Then you have phase 2, the 23rd to the 27th. And what that is this. There's 5 monster buildings that just take forever to walk through. And there's different goods in there from the 15th to the 19th versus the 23rd to the 27th. We were there basically in the building business. That's why I was over there at that particular point. And then they go from that to basically, you name it, the next phase of it probably has more mechanical aspects of it. But I do not expect that to come off. That's the bottom line, because what you get, of course, is that if they turned around and they're still just getting factories opened, what you're going to see there is that that many people just don't want to be together. And what does happen there is that most of the times is that you're meeting all the dealers there. Then what ends up happening, if you're going to do business with them, they invite you back to the factory. You see how the factory works. You see faces together, because what does end up happening, of course, when you import goods, the bottom line is that you want to know where you're sending the money. And, of course, what ends up happening is that you're talking about containers going on ships, coming over here, all of the above. And what hasn't, let me just look at Walmart for a second, because this is going to get interesting to see how this shakes out. So Walmart's still in great shape. You're at $116. Your all-time high up here is the 125. But what I expect we're going to see, and it's going to get intriguing to see how this works, is that, there's going to be a lag, meaning in the amount of supplies that have come in from China, and where these box stores, do they start not having enough supplies? Because of the Lunar New Year, what does end up happening is that all these box stores, they know that China's shutting down for 10 days, so of course they order enough, because there's a stalling of the factory, going from the factory to the ports, and China to the ports in the U.S. Now, that being said, what has happened is that, of course, you get factories that still aren't open. You get transportation that is definitely behind. There's no two ways about that. So we'll see where the rest of it does end up shaking out. But CVS, let's go to CVS and take a look at CVS. So CVS, folks, bottom line out here, it's only up 10 cents right now, but what you do have with CVS is that they are pushing their swing highs, and they're pushing that swing high with volume. What you had here is that they're saying that their earnings, let's see what their numbers are. And you got to remember something, that they turned around and took over Aetna. So the fourth quarter revenue, the estimate was $22.38 billion. They did 22.58, so they beat on that. Pharmaceuticals. Look at this pharmaceutical number. This is just amazing. This is where they took in the extra $3 billion too. Look at this number, folks. And if you wonder why we're paying so much for pharmaceuticals, this is the runaway market. So in 90 days, their estimate was to take in $34.67 billion. They took in $37.07 billion. Huge. Net income was a big number year over year also. Last year they Well, actually, they're up 23% from last year, which would make sense because the bottom line is that net revenue also, that's the combined companies when we're talking about. Still, their estimate was $63.95 billion. They took in $66.89. Comp sales, the estimate was 3.6. They did 3.2. A little light on that one. Earnings per share, though, estimate was $1.68. This is the range for the next quarter. They're over that even on the smaller end of the range. They're at 173 to 214 right now. And on the yearly adjusted basis, they're over that also. The estimate had been, well, no, they're actually a little, it's going to be on a yearly basis. It's going to be interesting to see whether they can actually pull it off. On a yearly basis, they were at 715, and now they're looking at 707 to 717. So you can see that's 704. That is, that's a lot less than the 717, of course. But you can see, let me just look at United Health for a second and see, did they just come up with numbers or are they just rolling? So United Health out here, that is, no, they're just rolling. They're rolling, they're just buying it. That's the bottom line. And United Health right now is up $11. The all-time high out here is 302.52. Let me pull this up. This looks like it's going to be a monster ABC up. This is crazy. So United Health's been on quite a run. I mean, you go back to October of 2019, and the stock was $212. You get 302. Some of the stuff is just unheard of. Yeah, over the highs. Let me put this on a monthly for a second. Wow. They're making money hand over fist. This is a major break top side. The real question is how long can it stay over 287. So yeah, the longer it stays over 287.94, the better chance that it has that this could be a monster ABC up. 287. If this is ever a monster ABC up, it's going to be crazy. Because it would be 107, 207, 307. Oh, my God. It's almost like 180 A to B, which would end up with 388 or something. And right now, you're at 302. And revenue-wise, that's how they're growing. They're still, you get a company taking in $260 billion that's growing about 3% a year. Monster number. Stay right there, folks. Come right back. Our phone number is 877-927-6648. We have the Dow Industrials trading up 254. Nasdaq's up 78. S&Ps are up 19. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 266. You get the Nasdaq up 79. S&P's up 20. Let's get over and take a look at U.S. Steel. So U.S. Steel out here, folks, been a dog for a long period of time. The low for the year is $8.87. The high is $24. When you take a look at the numbers in here, you know, the bottom line is it's hard to comprehend of how they just even stay in business. This has been going on so long. You know, they're going to take in $11 billion this year, but they're still going to lose $1.55 per share. Monster number. And this is after the tariffs come in for protection for U.S. Steel, for Nucor. Bottom line is that this is a one-way route, and that one-way route is all the way down, folks. It's going to be pretty amazing. It looks to me like U.S. Steel is going to try to go after the $6.67 area. We'll see where this shakes out. What you do have inside that steel business is that one of the largest, well, no, they're not a larger producer like U.S. Steel, but they're a billion-dollar company. It's JSW. They, as well as their CEO, were all over Trump's plan to turn around and tariff the heck out of steel coming in. Bottom line, now they're suing the Commerce Department because they didn't get the exemption that they thought they were going to get. What they were trying to do is that they, you know, if you watched this a couple of years ago, the bottom line is that they're out there saying, yeah, we're going to put a plant in Texas, we're going to put a plant in Pennsylvania. Bottom line is that they believe the administration, and thus far it's cost them $500 million, because what they did is that they built the first plant in Baytown, Texas. Now, it's kind of dicey how this was shaken out anyway, because their parent company is in India. It's a monster company in India, okay? So what they wanted to do is that they wanted to put, which they did, they put a plant in Texas. That being said, they wanted an exemption from the tariffs in order that they could bring in steel from India for a couple of years until their plants got up and going. Well, bottom line is that Wilbur Ross said, nope, that's not going to happen. Now they're going to be in court for a bit. The second $500 million they're not putting in, period, because the second $500 million was going into Ohio. Really intriguing, though, and I would say that it just shows be careful what you want, because what does happen when I look at U.S. Steel, right, you know, when things move on, folks, things move on. And the bottom line, U.S. Steel has been a dog for a long period of time, and they've had every protection that you basically can get by a government in general. You know, this has been a protected industry, and guess what? They still can't make money, okay? Why? Because guess what? Someone else has a better idea of how to do it, and a supply and demand curve, and what I suspect they work on a continual basis is work on corporate welfare. That's the bottom line. What is corporate welfare? Corporate welfare is getting the lobbyists turn around, lobby Washington for protection. They claim that you know, you're free market economists. Well, guess what? You're finding out right now exactly how many free market economists there are versus the aspect of how many industries actually get protected. And how do they get protected? You get protected by basically paying off the Congress, the Senate, and when you actually break the number down, it's a very small number that corporations have to come up with in order to basically get a little proposal in here, a little law in here, which basically most times helps them dramatically. Lyft, L-Y-F-T. This little baby came out with its numbers. Bottom line, market is taking it down about 10%. You're down $5.15. That being said, what you have with Lyft, this is kind of where we were last week. What the difference is that they are selling this down with big volume. You're selling this down today with 32 million shares. Lyft normally does, on a great day, it does 15 million. So, yes, they're definitely selling this down. We'll go over to Uber. Let's see what's happening with Uber. Lyft had got its move up. Yeah, Uber's staying up there. So kind of a big difference in both of those companies. NVIDIA is going to be coming out with its numbers after the close tomorrow. Now this stock is up 481. You're trading $272. They're looking for $3 billion to the top line, and they're looking for $1.66 to the bottom line. What's going to be intriguing here with NVIDIA is this. So NVIDIA has had an amazing run. That being said, this amazing run is absolutely after a crash. October of 2018, what you had out here in NVIDIA, watch this, I put this on a monthly. This is really hard to comprehend, actually, what happened with NVIDIA on the way down. So first off, on the way up, NVIDIA was almost a parabolic move. If we take a look at this, you're going to see in May of 2017, NVIDIA was $102. In October of 2018, okay, so we got, this is cool, May, okay, so you're talking about, what's that, 16 months. Bottom line, monster move, right? 292. So $107 to 292. Then an implosion. In October of 2018, in 1 month, we went down from $292 to $196. The next month, we go to $133, and the next month, you bottom out at $124. Sorry, folks, excuse me. So, huge move. So what's the point here? The point is, folks, we're going right after that high again. I'd love to see this test the high. Why? Because on a monthly basis, we came off that high, $292, and there's no reason that they come up with the numbers we're not going to hit that. So we came down with 324 million. Well, we're going up with half of that, 153. This would be an absolute classic also, that it grinds all the way back up, tests the high, can't handle the price, then in NVIDIA's chart, you'd end up with a consolidation. The amazing part about it is that the consolidation would be so big. This is very unusual that you have a consolidation that could be 292 down to 124. So that is going to be something that that's out tomorrow at 20 past. So what they do is that they wait for the future market to close. A lot of the high flyers, they come out right after the close. Some of them, basically, I think that are more tuned to the marketplace, come out when the futures are closed. I think that's what I'd do. I'd wait for the futures to close before you come out, because there's less participants in the marketplace also. Apple looks like it just did it. Apple, I think, was, as we're speaking here, Apple looks like to me that it almost just hit an all-time high. Let's see. Nope, it's not there yet. 327.85. It's gunning for it, and it's gunning for it with tremendously lighter volume, by the way. 22 million versus 57. And it wants to get it, though, right now. This is going to be a cool close, folks. You're going to see this baby ramp up into the close. We get 10 minutes inside the broad market, inside the futures market. You have over a half hour, 25 minutes for the first session. They're gonna ramp this market up. When they start accelerating up like this, the bottom line is that you can imagine we've been up so many days. You can imagine people saying, "Okay, man, the market's got to pull back. I'm going to sell this market near the highs. I'm going to try to sell it near the highs," and then they just run it right into the close. Dow Industrial's up 284, Nasdaq up 83, S&P's up 22. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Basil Chapman will be hosting a 90-minute live webinar for subscribers to his daily trading service, The Opening Call, Thursday, February 13th from 4 till 5:30 p.m. Basil will host his live webinar titled The Dark Cloud Cover, an Essential Market Analysis. In this 90-minute webinar, Basil will discuss the techniques he uses when identifying market downturns using his Chapman Wave, including how he uses specific ETFs like the SMH Semiconductor ETF as a canary in the coal mine leading indicator when looking for market downturns. By identifying particular weaknesses in the market technicals, Basil's able to identify the severity of the market reaction, and this is just one of many topics he'll be covering. To sign up now for the opening call, visit the front page of TFNN.com. Don't miss out on this special 90-minute live webinar with Basil Chapman, Thursday, February 13th. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks, and the bell did ring. What is that bell? That bell is to ramp it into the close, folks. When you take a look at this, if you're watching Tiger TV, this is pretty cool, just watching how this is shaking out, because it's the same MO just about every day now, until it's not. But that is actually, okay, so when you see this, you're going to see in the S&P first, ESH. So we're in the March S&P right now. We're at all-time highs coming into the close. And watch this spike. Okay, so it's been laying here. You know, the first high was this morning. It took quite a while to get back to it, 33.77. We just spiked to 33.80. And it's not gonna stop there, by the way, okay? Last 10-minute bar was good numbers, meaning volume numbers. This is going to be good numbers. They're going to spike it over there, see if they got any sell orders over that area. And that's what they're looking for right now. That's the bottom line. You don't have any sellers over there, guess what? The bottom line, they'll keep ramping it until they do find some sellers, and then they'll say, okay, are all the orders cleaned out? In this particular case, the NQs, right now we hit 96.24 just a few minutes ago, and bottom line, we're at 96.17, and that was a spike that got over the 96.20 from this morning. And, you know, it has the volume behind the move. Yeah, you back down a little off that, but they'll spike that coming right into the close. So this is going to get really intriguing, because now we're going to have is this. You're going to have Monday, Tuesday, Wednesday. We're coming back into Thursday and Friday. It's a lot harder to have markets back off into a Thursday and Friday when you have 3 days that are going forward. We've seen plenty of spike highs in the marketplace. As I said at the beginning of the show, the volume's not there inside the SPY, but guess what? This thing's going to close at an all-time high. That means it can go higher. NDX 100, same type of setup inside the NDX. The difference is in the Qs is that the volume is not as anemic as in the SPYs. The Qs have done 20 million. You're going to drop off, but not like the SPY. The SPY is a different animal, as is the NDX 100. Have a great night, folks. Have a safe night. Come back and visit us right here tomorrow morning, 8:30. Tommy kicks us off. Great show. Wow! Go get him, folks.